It is 15th of March on the Tuesday itself, and the time now is 2:51 p.m. in Singapore. My name is Dylan, and welcome to my daily trading analysis video. Today I'm going to be touching on the same 5 currency pairs as yesterday. Just going to be providing some updates and talk a little bit about what happened this morning. We have the Reserve Bank of Australia releasing its monetary policy statement, which shows that there's scope for further easing. Of course, we do understand that the currency level as for the Australian dollar against the US dollar right now is pretty high and is getting very uncomfortable for the Reserve Bank of Australia in order to bolster their economic growth with a lower currency level. And we have the Japan that is that keep its interest rates unchanged, but definitely still open to more easing in the near future should there be a need for it. So let's kick off with the Australian dollar against the US dollar. So if you look at the week 1 chart, the Australian US dollar, as I have mentioned, is trading above the 75 cents level. Right now it has already come down a little bit lower than that, and the currency level is, we know that that's where the Reserve Bank of Australia gets uncomfortable with, thus increasing the probability of a further rate cut to achieve lower currency levels, and price is beginning to fall just before it reaches the key previous support term resistance level at the price of 0.7605. Alright, so into the smaller time frame, to the 1 hourly charts. Right, there is actually a very clear uptrend. Alright, but it is starting to break down, and the price may begin its reversal from the strengthening altogether with the Reserve Bank of Australia monetary policy statements that states more scope for further easing rate cut, and that is a very strong support as well as the currency level itself, which is jeopardizing the RBS efforts to booster growth with a weaker currency. So we are looking for sell opportunity as price begins to retrace, and for now we will be looking at the level at the price of 0.7525, a previous resistance for us to look for a sell. In fact, it did happen once right here, so maybe we can look for the same level or probably some level that's slightly lower to go for the sell instead. So that will need to bring us into the 15-minute charts to look for the opportunity to go for the sell again. Alright, so that's for Aussie against US dollar. And next we have the Australian dollar against the Japanese yen. So in the day 1 chart itself, we've seen that the price is falling within a falling trend channel, and price has began to fall just before it reaches the top of the falling trend channel on fundamental reasons. As you know, the Reserve Bank of Australia may continue to ease policy further, and the Bank of Japan is keeping its interest rate unchanged. That helps to strengthen the Japanese yen further as well. So the Aussie against Japanese yen is looking at the downside. So let's zoom in the smaller time frame into the 1 hourly chart. Alright, again we have seen that the price has been appreciated steadily, but right now what we are seeing is that the uptrend is kind of beginning to break down on fundamental reasons. First time it came all the way down to this level, retraced back to the previous resistance level at 85.60. And then it went all the way down again, and right now we are expecting the price to retrace back to the previous resistance level at the price of 85.20 to go for the sell again. So that's really pretty much for the Aussie against Japanese yen. And let's take a look at the euro against the Japanese yen. Alright, in the day 1 chart, we have seen that the price has been depreciating steadily on the downtrend with significant retracement every time it begins the next wave of depreciation, and price is now staying resisted at the previous key support term resistance level at price of 127.18. So and we have already seen that the price has made significant retracement as well, so it has already begun to depreciate, or rather it's embarked on its next wave of depreciation. So into the 4 hourly charts, alright, the current resistance level at 127.80 is also supported by the Fibonacci retracement of 50%. That gives more reason for us to go for the sell, expecting the price to depreciate further. So right now we will be looking for a opportunity to go for a sell in a smaller time frame we have seen that in the 1 hourly chart there is a head and shoulder that's forming, and the second shoulder has completed, came all the way down, breaks below the neckline. So expecting the price to even fall further. So into the smaller time frame, we will be waiting for the price to retrace, hopefully back to the neckline, at least at the price of 126.09, to look for another sell opportunity. And at the same time, we are also seeing that there is a falling trend channel right here. Alright, so either at least as it comes back to this level at 126.09, or it could go all the way back to the top of the falling trend channel. But however, that this channel itself is a 15-minute chart, so we don't really give that much of credit to this channel itself. But just to let you know, that's what's forming right here. So that's for the euro against Japanese yen. Next, another yen pair for the dollar against the Japanese yen. In the day one charts, as we can see, price ever since plunged to the lowest at 110.87, yes, moved into consolidation, moving sideways for the past 1 month. And into the smaller time frame, in the 4-hourly charts, price is seen consolidating. And while it consolidates, it also makes creates lower high that the signals the price may fall further every time it forms a lower high and got resisted by a falling trend line as well. And the dollar is unlikely to appreciate against the yen for fundamental reasons, as we know that the yen is still strengthening, and the US dollar may continue to depreciate a little bit further, as the Federal Reserve is expected not to raise rate this month. Alright, so we'll be looking for sell opportunity. In fact, it has already begun to fall. So into a smaller time frame, again, we'll be looking for a retracement, a significant retracement in the smaller time frame. Then we go for the sell opportunity. Probably for this case, we can be looking at this level at 113.53. Slightly higher will be at 113.58. It's really very small area to be looking at. But if you go for the sell, we would like to set a stop loss that is at least slightly higher than the key resistance level right here at 113.88. So that's for dollar against Japanese yen. And last but not least, we have the pound against the US dollar. So back to the day one charts, the current structure that we have right now, and probable inverse head and shoulder. Therefore, we initially expect that the price will continue to appreciate further to the key resistance level right here at 145.98, which would be the neckline of a probable inverse head and shoulder. But however, the previous yesterday depreciation seems to be pretty strong, covering one of the bull candle right here, as you can see, signaling for further depreciation, and probably it is already beginning to form the second shoulder of the inverse of the probable inverse head and shoulder right here. So therefore, into the smaller time frame, all the way to the 1 hourly charts, yes, we have seen that the price has been appreciating steadily, but this depreciation right here is kind of breaking the uptrend down. So we will be waiting for the price to retrace this time out to the previous resistance level right here at 1.4314 to go for the sell, as it forms another head and shoulder in the 1 hour chart as well. So that also points the price to go down further. Alright, so that's for the pound against the US dollar, and with that I have come to the end of today's trading analysis video. So thank you for watching, and I'll see you again tomorrow.